Man, oh man, what a day, what a ride, what a wild session today. Hope you guys made some money on that beautiful reversal. Boy, do we have a lot to talk about tonight. Thursday evening, we're getting ready for what could be another wild, finally Friday session tomorrow morning. I have a lot of great trades I'm tracking for tomorrow. I'm going to cover all my favorite trade setups in the video tonight that we have a game plan to make some money on Friday. But before we jump in and get the party going tonight, make sure you subscribe to the channel that way you don't miss tomorrow night's video. And if you guys enjoy the video tonight, thank you so much for tuning in. If you enjoy my content, hit that like button for me. Give me a shout out in the comments section below. Thank you so much for tuning in. But enough of the intro. Friday is not going to trade itself, and boy, if it's half as wild as today, it'll be a busy one tomorrow morning. Where are the best trades setting up for the last day of the week? Finally Friday. Boy, everything pretty bearish right now, but I think you'll see though tonight we'll take a look at some higher time frames here in the video here tonight. Everything's bearish, but we're bouncing around back and forth here right now. So I'll tell you, we talked about reversals last night in the video. We're talking about more reversals tonight, but tonight we'll talk more about how we can run stops, right? Because stop runs, using stops as fuel, using bull traps, using bear traps, that is likely where the big easy money is made tomorrow, and we're going to cover all the details, don't you worry, across oil, Nasdaq, and of course the S&P tonight. Before we jump in and talk about my favorite trades for Friday, let's all get on the same page because we do have some big news tomorrow morning. 9:45, boy, that is the perfect time for some big news on a Friday morning. PMI number, of course, is pretty much the only big news we have scheduled here for tomorrow. Now, remember, Fridays love to run. Okay, so my goal on a Friday morning, the window of opportunity is oftentimes smaller on a Friday morning, especially after a wild couple days we've had of earnings season this week. My kind of mindset, my goal on a Friday morning is to get into something early and then try to leave a runner. And so that 9:45 news hopefully will get things nice and moving for us here shortly after the opening bell at 9:30 tomorrow morning. Get that PMI number. Again, my goal will be get into something as early as I can and then see if I can leave a position open right into lunch, into the afternoon. And you'll see tonight in the video tonight, on the charts tonight, we might have some really nice runners, right? If you've been here the last few months, a lot of nice runs on Friday afternoon. So keep that in mind and have that mindset early in and leave a little runner. Now, we are watching earnings this week, but we don't have a lot to worry about tomorrow. P&G is a pretty big company, but it's definitely not as big as stuff that we have coming next week. So big peak week earnings next week. I don't think much to worry about here this afternoon after the close or into the open tomorrow, right? But we will talk a lot more about earnings coming up here next week. So PMI number tomorrow, 9:45. Keep that on your radar. Remember, get in early as you can. Try to leave a runner, and I'll give you some good setups and some targets on the video here tonight. So back to our charts though, because of course the money is made on the charts. And as I always tell you guys, if you like making money, I would definitely make sure you watch this video all the way to the end, because I'm going to talk about my favorite trades across all three of these markets, and every trade I talk about can be applied to your favorite market. So don't just cut off after your favorite chart is over. I'm going to tie it all together. I'll give you a reason to stick around all the way to the finish. Let's go S&P first. We'll go Nasdaq, and we'll finish up on that wild oil chart to finish up the video here for tonight. As always, this is a 7,000 tick chart. It's a tick chart. There'll all be tick charts in the upper left-hand corner. This is the 21 EMA, the exponential moving average, and probably one of the most important times of the month so far. I'm going to drop some 60-minute charts and some 4-hour charts down the description of the YouTube video. These are very important right now. I don't say this very often. Usually I like to use the higher time frames, the 60-minute, the 4-hour, as a directional bias. They're not always very important technically, but tonight they are. So you'll definitely want to check out the 60 minutes and the 4-hour charts linked up in the description, because I'm going to talk about those here in a moment. All right, so just be aware of that, where you can find a little more information supporting information for the charts in front of me. So knowing that, what is the most important factor right now on the S&P and the Nasdaq? It is those higher time frames. The higher time frames are really going to make everything a whole lot easier. Now, I posted this chart on Twitter. By the way, I would definitely follow my Twitter. You can find all the links and all the handles down in the description of the YouTube video tonight. I do post chart updates throughout the day on my Twitter feed. I just started doing it. I find it to be the easiest way to kind of get this stuff out to you guys. So definitely check Twitter out. Follow me on Twitter, and you'll get some updates during the day. I posted this chart earlier, and what do you see? It's a bull market into a trading range. I'm getting a lot of questions right now. Why is the market so wild back and forth? And this is why, right? It's a range-bound market where we're basically rotating back and forth. So these markets can really get frustrating until you realize what you're dealing with. It's a bullish bias, so we definitely have a little bit more bullish, right, bias, a little more bullish tone to the market. But we have to think now the market's going to want to rotate back and forth, right, back and forth. So the goal is to buy low, to sell high, and most importantly, we don't want to chase it, right? Don't chase these moves because you're walking right into some bull traps and some bear traps. The same thing goes here on the Nasdaq. Nasdaq is a little bit more mixed right now, but bullish into a trading range, and that's what's causing this rotation back and forth, right? So we're buying as it goes lower, we're selling as it goes higher, and we're trading the rotation. So now that you kind of know more about kind of the bigger picture and you kind of know what's going on, and again, we don't usually have these nasty ranges on the higher time frames, but that really will make your job a whole lot easier, and it will keep you from pulling your hair out with these what would appear to be completely irrational moves here. So back to our tick chart here now, kind of more of an entry time frame. Knowing this, right? Knowing this, if we are anticipating this market is going to be rotating back and forth, the best trades are usually going to come around the edges, right? Around the edges. We're buying low, we're selling high, we're buying low, we're selling high, right? We're trading that rotation with a little bit of a bullish tint to it, right? Because of the overall kind of bullish directional bias. Now, the way that you do this, if you're taking my free trading course right now, right, we talk about, a lot of this, two basic types of patterns, right? Failures on the edges, right? Trapping buyers and sellers in, using stops as fuel. And we talk about traps, right? Traps back and forth, ultimately. This is in a nutshell how you can make money in these range-bound markets, okay? So as we go lower, we're trapping in the sellers, using their stops as fuel with failure patterns. Again, the same failure patterns I talk about in our free trading course. As the market goes higher, we're now using what I call trap patterns or trap setups, my personal favorite out of all of them you guys are learning in the free video series, right? As we go up around the edges here now, right? Now buyers get suckered in, right? Now we get buyers trying a couple times, and we use failures, stops as fuel, right, to turn it back around again. And then as we're rolling back down, what do? We'll use traps, right? In this case, it'll be bull traps as we go higher, right? Failures around the edges, traps as we rotate, right? The sooner you understand that kind of technique of rotation back and forth, the sooner you'll be making money with this stuff, right? And not wondering what the hell's wrong with this market. So we have a lot to cover, right? I want to talk about how to sell off the high, right, with failures and traps. And I also want to talk about, as we go lower, how to buy off the low, right, with some failures and traps. So why don't we talk about, we have most recently a very strong move down. And so oftentimes in very strong moves down, we're going to get a retest, right, of that level. And so that may be in store here in the overnight, right? Maybe in store here in the Asian session. So if we do see this market now going lower, as it certainly may, because that strong move lower again, this is where we start to think about failures. Now, I'm always kind of telling you guys, you want to think about two things. How is my location and how is my momentum? In a range-bound market, it's a great place to be a buyer, okay? So location is great. The problem is momentum is too strong, right? If I try to buy down here, there's a good chance it may keep going lower, all right? So I can't just pick a bottom on this. What I want to do is I need to get some sort of catalyst, some fuel to turn this momentum around. And to do this, this is where you use a failure pattern, right? And to do that, you want to use what we call the 2-try rule. You guys learned about this in the free trading course, right? So you want to see bears try once, you want to see bears try twice. Okay, now look at how I do this, okay? The bears try once, we go a little bit higher, right? The bears try again. Sellers are going to sell into this as it goes higher, and so I have to rope them in, very, very important, and then use their stops, right? Again, use their stops as fuel for that run going higher again. And we have a pretty good idea of where the market would want to go at that point, right? It wants to go to the edges, right? It wants to rotate. So this edge, right? So this edge over here. Now, if you listened before, as we start making our way higher, what's the best way to buy it now? Remember, traps. Traps are what you use when the market rotates back in the opposite direction. Okay, traps are very simple. As we're going higher, we're literally looking for, well, as I always say, strong move, shallow pullback, higher high in price. The moving average will usually be just a little bit above it like that, right? Nice strong signal candle. You guys will learn about signal candles in the free trading course, right? And that's a trap. Okay, ultimately, again, I'm looking for failures off the low. Okay, 2-try failures because we're so bearish right now in the short term. Okay, and then again, it's called a bear trap. Strong move, shallow pullback, higher high in price, got to be a higher high in price, and then a good entry signal candle. All right, you guys learn this stuff in the free video series, which I know that most of you guys watching right now have taken that free video course. You're learning failures and traps. I get a ton of great emails every week about you guys making money with these. But if you're here for the first time, if you haven't taken that free video series yet, one of the few folks watching tonight, I'll put a link up there for you in the upper right-hand corner. Grab that link. Take that free video course, because I'll tell you, the strategy you'll learn in that video series will teach you a simple trick to know exactly where the best winners will be each day. If you're missing the best trades each day, I'll teach my 4 favorite entry patterns in that free video course. It's perfect for someone trying to make a steady income stream in the futures markets or the ETF market. So definitely grab that link and let me know how you do with it, because I get so much good feedback right now. So grab that link that popped up there. Again, I'll put all the links you guys need, by the way, in the description of the video. All right. Now, some variations of this. Okay, some variations of this. Sometimes we'll go lower. We'll pull back, right? We'll pull back and we'll retest the low. Okay. We talk about this in our video courses in the trade room. We call it retest, reset. Okay, retest, reset. What that means is once we retest that low, now we reset the count. Okay, remember we said earlier, looking for 1, looking for 2, again, and buying off the low from there, right? Again, 2 tries because we're so bearish here in the short term. And then as we're going higher, the goal, again, nothing different here. I want to be getting into some sort of trap entry before I get up to these prior highs up here. Okay, now this would be a good example, right? On a Friday, you would certainly want to leave a runner, right, up to something like this. Boy, wasn't that a great example today of why, we mentioned last night in the video, that's the prior week close right there, right, that 71.75. We talked briefly about this last night. On Thursday and Friday, the end of the week, right? The prior week closes become very, very sticky. We talked about this as a target today in the trade room. I did not realize it would completely collapse after that, right? But that is almost always a good target. So if we understand the principle of getting into a failure, a trap, right, before we take out other sides of the market, definitely want to try to leave a runner on this, right? This would be a good example of leaving that runner on a Friday. All right, guys. The hardest part on these types of moves is, and again, I'm going to talk about if we go higher here in a moment. But the hardest part right now is if we get these strong shots down. Again, remember, keep reminding yourself, right, where we are in the 60-minute. Right? Because even if we get a strong shot down, we're still got a range above us, overall bullish. So until things really rip lower and keep going, we're going to keep on seller failures, popping it up, right, in traps. And if things do turn bearish and ugly tomorrow, right, we'll clue everybody in, of course, in our trade room. All right, guys? So that's the way you want to think about buying this thing off the low. If it was to keep going higher, right, if we went higher here without going lower, what do you think the best entry would be? You know the answer, right? The answer is traps, right? So if we open up in Asia, right? Because nobody knows what's going to happen in these markets, right? Don't kid yourself, right? These markets are wild right now. If we get going higher here, what's the best way to get in? A trap pattern, right? It's very simple. This is not rocket science, right? As the market rotates back and forth to the edges, right? We use traps. And really, ideally, be great is if I could draw like a trend line off the high, a channel off that low, right, and kind of get some traps off of those channels. That would make it even better. Draw that channel off the high like that, right? Bring it down off that low. I think I probably have 100 examples of stuff like this in the free course, right? Drawing those channels nice and tight off the highs, right? But again, you want this entry before what? Before you take out the other side, right? And then once we get to the other side, okay, now how do we sell off the high here? Let's talk about that now on the NASDAQ, right? NASDAQ is very similar here to the S&P. Okay, again, on the NASDAQ, the key to making sense of this and not letting it, not letting it drive you wild right now is, again, the higher time frame, right? If you look at the 4-hour chart, the 60-minute charts, again, I posted those on Twitter earlier. They're linked up in the description of the video. We're definitely more mixed, but we're more bullish, right, into that trading range. So NASDAQ is a perfect candidate right now for a shot lower, a trap in, and right back up again. I mean, think about how many buyers are probably waiting down around that, 12,900 area. There has to be a just block of buyers there on your book map or whatever people use these days, right? So that area down there, we could easily shoot lower and right back up again. So like I said earlier, you don't want to chase it. Okay, that's the biggest challenge, right? It's going to feel very bearish, but you don't want to chase it. Okay, so same idea. We go lower, right? We're trapping the bears in. As we go higher, right? We're looking for trap entries. Before what? Before we take out other sides, right, of the range. So literally copy and paste the S&P game plan over in the NASDAQ, right, and you'll probably have the winning strategy here for tomorrow, right? If we do go higher here, what do we do? What we're looking for a run back up again. Now the NASDAQ's pretty interesting because you've got what we call measured pullbacks. Right, you'll notice these pullbacks are all pretty similar. Now, I will say that usually by the time you pick up on these, usually that kind of correlation breaks down. I always tell my students the first one, which is kind of this one right here, is usually the one you can rely on. The third one isn't always, because first you see this one, right? You find that one first, and you go, okay, good. How about this one, right? Now again, you didn't need that, right? Because you had the prior week close. We talked about how the prior week close is notorious for being a magnet area at the end of the week, right? Thursday and Fridays. Pretty much worthless at the beginning of the week, right? Okay, so this one may not be as accurate as well, but I want to put it on there just so you guys can see where it is. But we have to assume they're going to take that high out, right? So as we go higher here, we look for traps, right? It's that simple. Now, if we end up rolling higher here, okay, now this is where I mentioned earlier that we're range bound. Okay, we're range bound with a little bit of a bullish tint, right? We're a little bit more bullish than bearish. The 4-hour charts, which are in the description, they will definitely give you a good idea of that, right? So if I'm going to use a failure pattern, okay, to sell off that high now, but this is where that little bit more of a bullish bias comes into play. So we talked about the 2-try rule, right? The 1, the 2. Now, when I'm trying to go against the overall directional bias, I have to be a little bit more careful, okay? So for example, look left, and you'll see we have a great example of really the ideal way to kind of sell off that high. Now, let's face it. Every once in a while, you're going to get stuff like this, okay? Every once in a while, it'll go up and get crushed right back down again, okay? Don't let these get under your skin. There's not much you can do with these, right? Unless you've got some serious cojones and a very, very big account and you're prepared to sell more, right, as it's going higher. I'm sure there were a lot of bears who were shorting the heck. Obviously they were, right? Who were shorting into this thing, right, off top of this channel. But, for most of us trading, normal size accounts, right, that's very difficult to pick that top, okay? most of us can find a way to use this one to get that reversal off the high. Okay, now think about this pattern over here. It's the same basic two-try failure, but it includes a bull trap at the high. We go up, the buyers try once, they try twice, and there's a trap. What do we call these? I call these crown reversal patterns, right? We talk about this a lot in our video courses. It's the same basic idea, but because you're going against that trend direction, you want to get the trap involved, all right? So this is going to be kicking up a little bit more, right? It's a little bit more advanced variation of it, okay? So again, buying off the low, 1, 2, right? I can be a little more aggressive because I'm going with the overall bullish bias, right? As I go higher, take out some of these highs up here. Remember, you have to expect in an overall bull market. And I know people are going to hate on me for saying overall bull market, but look at the 4-hour, look at the 60-minute, and you tell me what it is, right? I don't care what direction. People think I'm a perma bull. I could care less. I really don't care what direction I trade in. I just trade the direction the higher time frame tells me. It makes it easier to avoid losses. It makes it easier to get into big winning trades because eventually some of these will just rip and run for you. Anyways, so as we go higher here, remember, these buyers, that's a lot of momentum now, right? A lot of momentum coming off of that low. And one of these could easily just poke and keep going, right? Could easily keep on ripping. And like I always say, leave a runner on Fridays. Well, I try to leave a runner almost every day, right? But really on a Friday, try to leave that runner because sometimes they will rip, right? Anyways, so now it's pulling back, right? And remember, where do we do this? We do this around edges, all right? I can't emphasize that enough because that's the key to a range, right? Don't chase it and then trade the edges. So what you want is you want to see those buyers coming in and try a couple times. Now, remember, buyers want to buy low, okay? Sellers want to sell high. Buyers want to buy low. So as we pull back, the buyers try once. Okay, this is very, very important. They go to a lower price now and they reload the clip. Okay, imagine there is buyers, right? Waiting down here. Okay, as the price pulls back, more buyers are getting in. There's a whole wall of buyers there, right? You don't need some software to tell you that. Okay, as it goes higher, buyers are going to be buying into it. I need to recruit enough of those buyers in here buyers once, at lower prices, to then know I have the stops that I need to turn this thing around. Remember, all of that momentum, I need some catalyst. You know, we talked about this earlier in the week, right? We need a turning point, signs of exhaustion, and a catalyst, right? Those are the three keys to picking a top like this. Because of that bull bias, right, I really need, right, that bull trap. Okay, now these can come in all shapes and sizes, okay? Sometimes what happens is it'll run up, the buyers will try once, it'll kind of shoot back lower. You don't want to chase that. I know it's tempting because you're like, oh shoot, there comes the rotation again, I'm going to miss it. Again, you might miss it, all right? Let's face it, you might miss this. I miss trades all the time, okay? You're probably going to miss more than you'll take. That's okay though. You don't need that many to make a lot of money in the market, especially with leverage with futures markets, right? But you get one of those little bull traps, right? One of those bull traps, and I'll tell you right now, that will make you a believer, okay? Once you stay patient, you get that nice big win off the high, it'll make you a believer. And if you're really good with this, you can draw a channel off the low, up around that high, and man, oh man, those make it even better. Right? So again, we're incorporating the same failure setup, right? But a little bit more advanced, a little more conservative, right? Because we're going against that directional bias. And then what do you think? If the market drops out of the sky, okay, now where are we trying to go? We're probably trying to go back to the edges, right? And then what's the best way to get short while you're doing it? Don't chase after it. You sell as high as you can and you sell traps. Right? Remember, failure patterns, right? Failures around the edges, right? Traps as we rotate back and forth, all right? And eventually one of these is going to rip, right? One of them is going to rip. And when that happens, right? When that happens, if we were, for example, to rip higher here, right? Hold that pullback and really jam, right? And remember, because again, overall bull bias, if we were to really rip going higher, what's the key? Don't chase it, right? Don't chase it. There's more resistance up there, which you'll see on the higher time frames. What do? We go out, we find bigger channels, right? Bigger channels. All of that momentum, right? Anytime we see strong moves like this, they're going to want to retest. We wait for that nice deep pullback. We try to trap the bears in and back up again. All right. So if it does, remember, we only buy pullbacks whenever we get a really strong rip, right? A really, really strong rip. And at that point, we're not just blindly buying them. We're looking for ways to trap them in below the moving average off the low of that channel. Sometimes, though, they go up, they get below, we don't get that failure, and the price collapses back down. That's the way these ranges are going to go right now. All right, guys? But buy low, sell high. If we do get a big, big rip out, we'll obviously keep everybody posted in the trade room. But until that happens, right? Failure patterns on the edges, traps back and forth, right? Again, trade the edges and don't chase it, right? Don't chase it. All right. I'm getting excited just talking about this right now. Can't wait for Friday. All right, how about some oil? So oil, of course, oil's a pretty interesting one right now. Again, another example of I would definitely go out and check out that higher time frame chart, either on my Twitter feed right now or down the description of the video. The most important thing right now on the oil is that we are very bearish on the 60-minute chart right now, but we're sitting at some very key support levels. At this point, it does seem like, if you watch last night's video, last night we were sitting right on, and this will be easier to see in the higher time frames, we were sitting right on some key support, right? So you couldn't really do much to sell it at that point. But now as we're breaking lower, we're now, look at this pendulum swing, right? Look at that range. And again, this will be easier in the 60-minute chart. Look at that range and look at where we are. We're right around that pendulum right now. Now, there's no doubt about, right? There's no doubt about direction right now. Look at how bearish we are. It does seem like the bears are trying to close that gap, 70, 75, 63 or whatever, right? That was that kind of OPEC production cut gap. So we definitely could easily keep going lower here until we reach that gap. It seems like it might even go below that, right? Around 75 and a quarter. If you look at some of the bigger time frames I posted in the description tonight. So we know we're very bearish right now. But we're at some significant support. This 77 level is, well, if you know how I use ranges, it's pretty convincing, right? So a lot of support down here. So the game plan is this. Whenever we have a really strong bear market, we are looking for pullbacks, right? Trap the buyers in and back down again. So we are ultimately looking for failures, right? We're looking for failure patterns. One of the big kind of giveaways here, that's a range. That's a range up there. All of these levels are ripe for what we call a breakout pullback. A lot of times markets will, bear markets, they'll break down and they'll pull back, right? Levels of resistance, and they're looking for a short, right? Looking to come back and short that breakout pullback. And that, of course, will be where we'll want to use a failure pattern, right? Now, at the same time, we're sitting at a lot of support down here, right? So there's usually money to make buying off this low. Now, clearly, we're very bearish right now. So trying to be a buyer off the low is asking for trouble. What do you think is the best way to kind of get the bottom? We have to get some stops run, right? We have to get this momentum to pop off the low. Remember, a lot of times these things, they'll keep on grinding and grinding and grinding and grinding. It won't, sometimes it doesn't matter how many support levels are there. So what you want to do is you want to use failures, but you want to use bear traps, right? That's the key right now, the crown reversal patterns. So what you want to think about here is to try to pick the bottom on this, because again, we're probably going to see a deep pullback at some point, right? We're probably going to see one of these that will rip, okay? And there'll be some money to make on it. The challenge will be, of course, trying not to bleed to death, right? Little paper cuts, trying to pick the bottom on this. So what I usually do is in a bear market like this at support, is I look for signs of exhaustion. And we look for those bears trying once, bears trying twice. And again, remember higher highs because sellers want to sell high. And then we go out and we find traps. Now, it's very, very important, okay? Very, 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 capital very important that we pick traps on these, okay? Because what's going to happen is if you buy high, what's going to happen? We're bearish overall. There'll be bears waiting up here, and they'll try to take this thing lower, okay? You can make money. You can quickly scalp a quick target on these traps, move that stop to point of entry, get rid of the risk, and then one of them will go, right? One of them will crush, okay? A lot of these, though, will not. And so you have to kind of get into them, move stop up, get into them, move stop up, right? So as we're going lower, right? Bears try once, bears try twice, they go lower, right? Bears try once, bears try twice, we get that bear trap, nice strong signal, and we pop up. Oh, bears come in, they short the crap out of it, right back down again. You're already taking profit, right? You're already taking profit at these highs anyways, right? We talk about this in the free video course. We put our targets at those swings, right? Stop moves up. Okay, that one didn't rip. Eventually, one of them will, right? Eventually, try once, try twice. You don't know which one it is, right? Another one comes in, right? This one now, and that's right. That's the geyser, right? That's the one that rips, okay? This is how you trade. This is how you get into something in a bear market. You don't try to pick the bottom. You let the sellers try a couple times, and you buy as low as you can, right? That way, when it does pop up and you inevitably get that bull trap, you're protected. At least you should be, right? Because that's where your first target should be, okay? Stop moves up, and that way, if they do crush it back down again, no harm done. Right, you're picking up nickels and dimes, and then one of those dimes will turn into a silver dollar. Okay, and those are the ones that can really, really grow your account in big chunks. Okay, that's the way you buy in a market like this. Not easy. Okay, it's simple but not easy because it requires some patience. Okay, now at the same time though, let's say that we can get into something like this, right? Let's say we can get a crown reversal, a bear trap, right? And now we rip back higher, right? We're taking profit off in this area, taking profit off in this area. I would personally leave a runner on a Friday because you never know. Remember, there's a huge range up there, right? That huge OPEC production cut range is up there. So it's worth leaving a runner. But of course, you're taking profit, right? Half off here, right? Quarter off. That's the way I would do it, right? Half off, quarter off, leave a quarter for a runner, right? Whatever you want to do. Okay, anyways. Once we get up around these areas of resistance, now the buyers come in and hopefully they start chasing it. Can we all recognize, this is the worst place to be buying. Why? Because you're walking right into where every seller is probably waiting for a pullback right now. Okay, so you don't want to buy there. Now, if they hold this and then they rip, right? Okay, now we have what's called a 1, 2, 3 reversal pattern, right? And now we can go out and find a new channel, right? And start buying those pullbacks. But this is a different story, right? At that point now, momentum is turned, and now we've got all that momentum in our back, okay? Right, in this example. Right, so remember, if we pop up, right now momentum is not bullish yet. Okay, very short term, but very long term bearish still. Okay, so let those buyers try to foolishly buy it up and simply light those stops up, right, for that run back down again. Okay, these will oftentimes turn into those failure into pullback combos that we talk about in the free trading course. Right, so again, you're trapping the buyers in. Right, around key areas of resistance. Again, could be here, could be here, could be here. You're trapping the buyers in, using their stops as fuel. You know me. I think the easiest way to make money in any market is to trade in stops, right? Because when people get stopped out, they don't think, right? They just get out, right? And they use market orders. We get squeezes. We get big moves when stops get hit. So that's my favorite way to trade. It may not be yours. That's mine. So failure patterns are how you trigger stops, and then the pullback pattern comes into it. The pullback pattern. Remember, the pullback, you want to get that well before you run back into that low, right? Because that's the objective. Okay, and then eventually this will turn into a range down here. You can trade back and forth, right? Buying low, selling high. All right, guys? So again, just going to repeat myself here, right? Traps off the low, back up, really bear traps. As we go higher, we're losing failures. 1, 2, right? Back down in. Okay, if for some reason those buyers, because again, it's a big range above us, if the buyers hold on to it and really jump, right, and really rip, okay, now momentum is turned. Now that range above us in the 80s now acts as a magnet, and now we can go up, right? Find those bigger channels, right? Bigger channels, start marking off those prior swings. Swings are where traps live, under the moving average, right, for a failure pattern. The only thing you want to be kind of aware of on this is that this reversal needs to really punch, right? It has to be, as we say in our trade room, it has to be convincingly, right, break through these areas. Because again, those lows that we had on that range, right? So they've got to get through this area, right? This area, and pretty convincingly. If it pops up pretty strong, careful, right? Careful, probably still coming back down into that low. All right, guys. Now, I know the markets will throw something at me that I wasn't expecting tonight. So don't forget, we have a trade room. Right, every morning, 8 o'clock Eastern time, we plan our trades and we trade our plan together. I'll put all of the membership links, the trade room links. I'll put the free video course links, the higher time frames, my Twitter feed links. I'll put all the stuff we talked about tonight down in the description of the video. If you need any help getting access to our free video series or anything along the way, the easiest way to get help is to call the office. Live chat's always there. Send us an email. I don't get to comments in the comment section as fast as I would like to. So if you need help, just call us. We're always here to help out. We're a small business, family-run business. So don't be afraid to call the office. We're always here, or use that live chat. And in the meantime, hope you learned a bunch tonight. Hope you guys use it to earn a bunch tomorrow, right? Trade those edges back and forth. And thank you so much for tuning in and watching all the way to the end. I do these videos for people like you because I know you're serious about this, and I hope we get a chance to see you sometime soon in our trade room as a new student and a member. But I'm gonna wrap things up for now. Have a great rest of your evening. I'll be back not tomorrow night. They do let me off on Friday nights on the YouTube channel. We'll come back though, of course, right next week, and we'll do it all again for peak week, earnings week, that final week of the month of April. Guys, my name is Joseph. Thank you so much. Be well, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.